G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your research when it comes to investing. Be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So today's video, we'll make a short one, hopefully. Nice short, 10 minutes potentially, maybe 15 minutes. It's about Bitcoin, okay? All about Bitcoin. And you can see here the moving averages, and look at MACD, okay, as well. And look at the risk metric, just to put the cherry on top. So, all right, let's make this one quick and simple and straight to the point. So, currently, Bitcoin is sitting on the 100-week in blue moving average, okay, weekly candles, you can see there. And 50-week is hovering above. So we've closed 1, 2, 3 weekly candles below the 50-week moving average, which historically has suggested that we are entering a bear market, given that we're in Q4 of the post-halving year. Okay, and I'll show you why. So as soon as we broke this level, we broke it there. Obviously, we haven't broke it this time all the way through this bull market, okay? We go back to 2021 cycle. There's your Q4. We broke it, right, durably. And there's your bear market, okay, all the way down. And back in the previous cycle before that, 2017, post-halving year. Okay, there's your top. Come down, retest it, come up, and then we break it here, okay? And there's your bear market. And then 2013, okay, look at 2013 as well. There's your top. Broke it here, okay, all the way down, okay? That is historically, even here in 2011, if you want to count that one, it's up to you. And all the way down. This has been historically 2011, 2013, 2017, and 2021. The way to tell if the bear market is beginning, the bull market's over. So far, we've broken it, but we're stuck between these two moving averages. Now, the question is, can it still continue and deviate from what's happened historically? Okay. And do something different and actually find a low here and not go below this. Because this is a line in the sand, in my opinion. Because if this really breaks, then you've confirmed again, okay? And this is definitely going to go lower. Now, I'll show you why. We'll go into it. So get rid of these drawings, and we'll probably start from the very beginning of Bitcoin. So let's go back. On weekly time frame, as we move, we'll stay in this time frame. Now, this moving average 100-week starts here in 2011, doesn't go back any further. The price is pretty messy here, as you can see. It's a very new asset then. Okay, so 2011, we wicked, we came below it, closed here. So 2 weekly candles below 100-week, but still found slow and shot up higher. So I'll show a nice, I'll do that better. So nice circle. There you go. There's your 100-week bottoming out and going higher. All right. So with 100-week mainly on this scenario. So once you go above, that was it. Keep going. There's your cycle peak in 2013. Okay. Broke the 50. Came down to the 100. Right. 100 hovered around here for a bit. Okay. You can see here. It sort of hovered, closed below it, above it, then eventually closed 1, 2. All right, 2 weekly candles durably, and it went lower, okay? As you can see there. And then that's when it sort of entered its bear market low, all right, which is here. Okay. So I'll just make this the breaks in orange, the breaks in orange, and the red as marking the low. So the low was there, okay? It bottomed out at the 100 this time around, and it bottomed way below the 100 in 2015, okay? So 2014, that was the line in the sand, and then bam. Even though the 50-week was technically, that was a signal, but for this sample's sake, we're talking about 100-week. 100-week closed below 2 weeks, bam, there's your low. Okay, then we go up and up and up into the next cycle in 2017, okay? Obviously break the 50 here, as I showed you before. Came below, and there's your 100-week, right? Close it a nice weekly candle, and then a massive candle after that, and that was it. So that was definitely a bear market, and it capitulated quite quickly after it broke the 100-week. And there's your low somewhere here. All right. Just make it red, of course. All right. And this bottom here, now this bottom, basically the previous high in 2013, as you can see here. And this here bottomed way above the high in 2013, but it's somewhere around here. High in July-ish of 2017, roughly around there. It's not perfect, but yeah. Anyway, that's not the point of this video. Anyway, it went up. All right. And historically, you want to stay above the 50 to continue this sort of bull run, because every other time we get above the 50, okay, and it continues up and then until it breaks and goes lower. Same as, this cycle here. Goes above the 50, boom, stays above it until it breaks, and there's your bear market. This time around was a bit choppy, okay? So we broke above the 50, the 100's there too, okay? We held the 100. We broke the 100 slightly, okay, and closed sort of above it. So not two weekly candles, 1, 2. And we sort of struggled. And we sort of held. We sort of did hold the 50 and the 100 sort of thing. And it was a fake break, and then went higher. Then eventually we capitulated, okay? And that was your pandemic. Throw it off course a little bit. And then it went above it, and then it stayed above it, okay? So that was sort of a different example there. But we did come back down to it. Okay, we didn't break it though, durably, so I'm not going to draw a circle there. And then boom, we held the 50 all the way up to the cycle peak, and we crashed. Right, here's a 100 break right there, and it's just 2022 bear market. Make it orange, and then your red, which is your low. Okay, make it red, and that was it. 100 break, bam. 50, obviously, yeah, that's an earlier signal than this one. That's just how it is. The reason I keep drawing back to the 100-week moving average, so we broke above it, both moving averages. There's your bull market, stayed above the 50, 50. Now we've broken the 50. The bears are calling the cycle over. We've topped in Q4, okay, Q4, post-halving here, Q4. Technically we have topped Q4, but 100-week is still holding up, okay? Even though the 50's broken, they're not too far off each other, all right? So that's a good sign that it's not well below, and 100 weeks not like down here, all right? It's actually quite elevated, and you can see it's nicely sloped upwards, okay, which is healthy. Still in an uptrend. The problem is, we're stuck between it. What are we going to do? We're going to hold this or break. That to me will be a signal. If it does break, a week, 2 weekly candles below it, 1 weekly, maybe 2 durable, just to make sure, and then we're going into the bear market. Okay, this is a line in the sand, in my opinion, and it's currently sitting at 84,000. Okay, so wick below it, wick didn't close a weekly candle below. So I'm just telling you right now, 100 week, that's your lines. 100 week, capitulate. 100 week, bam. Here was actually the low in 2011, so different there. So 100 week is a very, very crucial moving average, in my opinion. And obviously, go back to 2019 again, and there's your held, okay, to continue this rally, but we've got the pandemic that threw it off course, all right? As soon as you broke below, that was really quickly V-shaped recovery, and then bam. So I'm showing you how important the 100-week moving average is now, that we're actually testing it at the moment. And that's that one. That's 100-week. Probably take these moving averages off now, so it's not as distracting. And we can keep on logarithmic, okay? Now let's look at the MACD. MACD now. Hope that's big enough for you to see. Maybe bring it up a little bit more. Like that. Looks pretty good, hopefully. Now, I'll go back to the start. Okay, get rid of these circles. All right. Now, if you want to go to this oversold, that's what I'm looking at mostly. Okay, this is what I'm going to be drawing my conclusions here for the weekly time frame. We'll go to the 2 weekly time frame, and we'll do every single cross on the 2 weekly time frame, but the weekly time frame, we'll do the crosses only at the bottom. Okay, so touch the bottom here. This weekly, we'll keep them in. We'll stick to some colors. Okay, so we'll go green for weekly, and then maybe orange for 2 weekly time frame. So weekly is we're going to the bullish crosses, not the bearish crosses. All right. The weight, that was your 2011 low. Okay. Your weight next pit, it got to here. Obviously, we did go lower, unfortunately. So that was a fake out. All right. And happened again. So there's your durable low. All right. If you go a little bit lower here, a big wick, but we found a low here and price to go a little bit lower, consolidate, and then went higher. All right. It took a while to bottom out. Go to the next part. So it's 2015, we'll go to next bit, which was here. 2018, had a little pump, actually did go lower. All right. Which is here. So you notice these periods, this is in the midterm year. This is coming out of the midterm year, going into the pre-halving year. All right, so your first one was a fake out, was wrong, and the second one was correct. Same as here. The first one was wrong, the second one was correct. All right, next cycle, well, there's a low here, technically, but we didn't touch it. All right, we touched it here, and we'll count this one. Pink touched it, and there you go. We had this huge move up in the post-halving year. All right. And we barely touched it here. You can sort of count this one. So even though it got really, really close. I'm going to count it. All right. There it is. And there's your fake out, and then we went lower. All right. And the second cross was actually go lower again. All right. So there's 2 fake outs, even though we went lower again. All right. So you got 1 fake, 2 was real, 1 fake, and went lower again. Okay, so it wasn't a great signal to really mark the low, even though you had only one cross here in 2011. All right, 2 to mark the low in 2015 and 2019, 18, 19, and 2022 took a bit longer to really play out. Now we've got a touch here. Okay, in 2024. That was a massive push up from that level there. Nice and accurate. Didn't really occur there. And now we're coming to the point where actually it's oversold territory. So we could find a low somewhere here. Okay, and you hope it's not a fake out before it goes even lower. All right, like I showed you here in 2022, and here in 2018, and then here in 2014 to 15. Okay. All right. So you pay attention to that one. It's pretty notable. If you go to the 2 weekly time frame now, we'll make these in a different color. We're orange. All right, this looks a bit different. 2 weekly time frame. It's easy to navigate. Now, we're not going to worry about oversold. It's going to where every time it crossed. Okay, bullish, pink above blue on the MACD. So we crossed here. Make that orange. Boom, massive move up. And that's after it crossed bullish on the one weekly time frame. All right, it crossed bullish here. And then boom, had to move up. Okay. Come down, cross bullish here. After these cross bullish, boom. Okay. Nice move higher. Now we cross bullish here. Boom. Okay. A bit of fake outs here. All right, I'm going to count that one. Then we cross bullish here. After 1 weekly time frame cross bullish, 2 weekly time frame cross, we had a massive move up. Cross bullish here, massive move up. Okay, 21 peak. Cross bullish here. All right, went a little bit higher, and then rolled over. After the 1 weekly time frame, it caught up, and then bam. You can sort of count it there if you want to. It was just about to cross, right? So that was that one there. Okay, next one was here. All right, it did pitch it a little bit lower, 2 weeks time, but it was very close to lows. Nevertheless, after the 1 weekly faked you out, 2 weekly confirmed or close to a low, went higher. It was bear market low. Crossed bullish again here in October 2023, massive move higher. Again, just as massive candle erupted in November 2024. Boom, and move higher after the 1 weekly time frame cross bullish and touch the oversold levels. Okay, cross bullish here again, and then we had a nice little move here, consolidation, boom. Okay. And now we're sort of well away from crossing bullish. It's going to take some time. All right. I don't know how long it's going to take. It could take until February or March time frame. It could really take some time to cross because it's a 2 weekly time frame. It takes a bit more time than 1 weekly time frame. All right. Now I showed you the oversold ones and what that sort of happens there. I did have a green. Green is for 1 weekly. So go back to 1 weekly time frame. All right. The 1 week's not too far from crossing. So we could cross into January or February, all right, for the 1 weekly time frame. Bullish. And that'll be your earliest signal to get in before the 2 weekly time frame will confirm that. All right. So if I go back again, and I'm confusing you a little bit, we had across bullish, 2 weekly caught up, boom, continued. Then I'll add this one here for the 1 weekly time frame, which you're right at the moment, and then the 2 weekly caught up. These are all the 2 weekly crosses, okay? So I don't have to draw any more. Okay. After the 1 weekly crossed again, which is here. So it confirms the 2 weekly cross, higher. Obviously there's your bear market here, okay, your midterm here. We never had a 2 weekly confirmation straight after it. It took so long, well way down here, so that was a bit concerning. But your 2 weekly confirmed that nice bullish move here. Same as this one. Crossed here. About 6 months later, had a cross here, boom. Okay, confirmed the move. This is a bit different, didn't confirm the move. They're all a bit different. Okay, that was your bear year, your midterm year, boom, happened again. And then finally confirmed the move not long after that. They're very close with each other. Then so February to May is 3 months. All right. There you have way more crosses than this. I haven't been counting at all. So next cross is here. 2 weekly didn't confirm it. So you'd wait. Okay, cross again. 2 weekly confirmed it in November. So May to November, which is 6 months later. And we had a move, nice drill move from that point on. Okay, so you wait for these confirmations. Obviously the weekly time frame. Again, and again, all these crosses. You can see the pink going above the blue. Bullish, bullish, bullish. All right. Crossed here, a little bit of a bullish move, then went lower. Okay. Crossed here, and they confirmed it. Bam. All right. A little bit of a move, boom, dropped. And another cross here. All right, 1 weekly, and then 2 weekly caught up. Then we had a massive move when these two were close together. Huge. On here, it never had a 2 weekly confirmation to let it move higher. Okay. So I'm just showing you these two in tandem. All right. And there it is again. 1 weekly and 2 weekly very close together. Boom. Move higher. Another one there. I went higher. All right. Without the 2 weekly confirming it. There it is. Boom. And we have one here too. Okay. April, and it confirmed it, and then went higher. We haven't had a cross yet in the 1 weekly time frame. All right, still waiting on it. So it could happen very soon, the next month, or I reckon next month it'll happen. Sometime in January, we'll get a cross bullish. This should lead a nice pump from that point on. Now, I want to basically just get rid of the 2 weekly time frame. The 2 weekly will come back to 2 weekly, and basically hide the 2 weekly time frame. Okay, for the orange, it's nice and easy to draw back on the chart again. We'll stick to the 1 weekly from now, and that's the comparison between the two. Now I just want to show you the odds of a bullish move versus the odds of continued bearish move. Okay, so these are all the crosses that occurred so far for the 1 weekly time frame. Okay, so go back to the start again. And you can sort of go back to here if you really wanted to. So if you want to count these ones, right there, and that was one before that too, about there. Okay, so I want to count how many succeeded, how many failed with MACD crosses. So this one here, pumped, a little consolidation, went higher. So this was continuing bullish move. This played out very nicely. The second one, cross bullish, continued higher. Awesome. Played out well. This one here, cross bullish and continued to the peak. So it played out, okay? It's multiple weekly candles above. I'm counting as it played out well. If you held way too long, obviously you break even here, all the way down in the bear market low, like back down here, which is where you bought, right? All down here. So you didn't really lose much. Okay, happened here. And guess what? Obviously it was a low, went higher at that point. So all the way here, it was nice and it played out very nicely. This next 1 weekly MACD cross. You can tell me if it play out or not. Bet your ass it did. Happened here again, weekly cross, MACD, as you can see, and it's beautiful. Okay, here crossed, did it play out? We're in the post-halving, the midterm year, 2014, and it didn't play out. It was a fake cross. So what that is, red, so it didn't play out. This next one, crossed again, and it didn't play out. Okay. Then the third time it crossed, it eventually played out. Okay. So there's your low. There's your low again, and it went higher. So I'm going to count this as it going slightly higher, even though we pitched that lower. I'm just counting multiple weekly candles, okay, in a higher price. All right. And closes. This weekly close was around this point anyway, okay, before going higher. This next one, bullish cross, and it played out well. All right, there you go. This next one, yep, played out very well. Okay, as you can see there, way higher. And you can go, oh, I missed one here. Okay, I missed one here. Another one, and went higher. Again, keep going. 2017, bam. Again, crossed, went a little bit lower, wick, and then it went higher eventually. So you weren't in a bear market. Okay, you can go way down here, went higher, so it played out okay. Next one, then going towards the end of this, so October, went higher. You see how many times it's played out very, very well to the upside and continuing to play out very nicely. Okay, we had one here, and I'd say this is a fail because it was only 1 week after that, and then it went down. So that was your false one. It was no good. The second one was good. It's very low, and then boom, look at that. Massive move. It's the upside. Again, crossed, and then can you count this one? Well, the pandemic threw everything off course. We had a nice bullish move anyway. And then if this didn't exist, this would have continued. This is a shock event, so I'm not going to include this one. There it is again. And nice move higher. Okay. Again, 2021, late 2020 to 2021. There's your high. Played it very nicely. Again here, September of that year. Played it nicely. Now, again to the midterm year. Not very nice. It went straight down from there, so it didn't play out. Red. Cross again. Red. So no. All right. And eventually it continued, didn't cross, but it continued higher. So that was a divergence there, playing out. And you go down a 3-day time frame to get a nice cross, okay? Anyway, that's that one. And then it crossed again here, October 2023. This obviously played out very nicely. And this period here, okay, played out pretty well nicely. It did consolidate lower and go here, but ultimately it didn't go much lower than this point, and it did go significantly high up to here. So I'm going to count that as a played out very well. Here, played out very nicely. September 2024. Crossed again bullish here in April. And obviously you went higher from that point. So the amount of times it's crossed, bullish and played out, exceeds the amount it hasn't. Okay, he knows the pattern. Into 2026, say next month, we're heading to the midterm year, so it's a very, very bad year for crypto historically. Okay, so you see the reds occurred during the midterm years, as here I showed you, and here midterm year, and that's it. All greens for weekly MACD crosses. So very, very interesting how it's played out. Okay, I'll count them up. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27 times played out. MACD crosses in the weekly. Out of those 27, 1, 2, 3, 4, 5. So 5 out of 27 has failed, but obviously the rest is 22 out of 27. It's pretty good odds to me that we are going to most likely get, it's a hard because it's going to midterm year, whether it's a fake, then boom. I want to see this. If this is on a pump and it crosses bullish on a pump, I'm not going to be very, very excited about that at all. I'm going to fade that one. So I'll show you why. So we'll go back to the start, actually. So on the back of a pump, so it pumped here from the low to the high. It crossed on the back of a pump. Yeah, and I'll bring back the moving averages. I'll bring back the, if I bring back these, which one's a good one to use? Oh, I'm just trying to think what's the best moving averages to use. All right. We can use a 20-week moving average. Okay, this bull market support band. So on the back of it, below it, we pumped a little bit above it, we crossed MACD, and then bam, we get lower. We had a low, we pumped. Okay, we retested it. Then MACD cross down. Okay, so 2 times we pumped and then pumping into it. Okay, into the moving average and went down. Again, we had a low in June, pumped up to the 20-week moving average, crossed bullish, and we went lower. Okay, 2018. 2022, we had a low. We pumped into the 20-week moving average, crossed bullish, went lower. Okay, happened here. We pumped. Didn't quite get to it though. Went a little bit higher, got close, and then went lower. So we pumped into it, into this MACD cross. Okay, now we're not pumping into it at all. We're sort of down here, near the lows. If you can cross bullish here and stay low, all right, as you can see, we did pump into it here. It did, okay, it did, and it went lower. But I'm just saying, it's just an example. So don't kill me for it. So I did pump into it. It did pump into it. It did pump into it here. They all did. Essentially, they all did. So that's probably a bad example. You want to see a massive move up to here. Okay, it's a big move to get this 20 moving average. Okay, it's a massive, nice move here. You want to see it low, right? Not getting there. All right, nowhere near there. When it crosses bullish, the chances of a pump beyond that are likely, more likely, and you should break it. Okay, so that's your line in the sand. You got to break that. You got to break the 50-week here. All right, these two, and the 100 weeks holding nicely. If you break the 100 week, it's over. It's done. That's the line in the sand. It's over. Okay. Like I said, every time we put bullish, 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 above the 100 week bullish, we're below it, we went down. Okay. This is above it. We went down. Above it, up, 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 above it, up. This is a low, so it was below it, went up still. You were above it, went up. So mixed results, okay? Whether we're below it or above it, it doesn't matter. It doesn't matter. The chances are that we need to hold this, okay? 100-week moving average. If it closes below it, it's over. It's bear market. And I'd wait for this weekly to cross wherever that crosses. And that could be a fake cross like I showed you in this one here. So you into the bear year, 2022, the midterm year, cross bullish, still went lower. Cross bullish, still went lower, okay? 2018, we crossed bullish, still went lower. It happened here in 2014. We crossed bullish, we still went lower. Cross bullish, still went lower. Okay, I'm just trying to show you examples there. That it closed below the 50, trouble. It closed below the 100, trouble. All right. Same as here. The 50 below it, 100 below it, bam. Below the 50, below it, below the 100, keep going down. All right, so we want to hold the 100. That's all I'm trying to say. Hold the 100 and we go higher and we cross weekly bullish, and then the 2 weekly, whenever that crosses, we want to cross bullish. Okay, that's going to take some time. It's going to be a bit more structure there, but if you get rid of these drawings, also focus on the 2 weekly time frame. So your bullish cross marks your low, and then boom, go higher there. Oversold conditions. All right, the oversold level, there's your low in 2018, 2019, boom. All right, there's your low here, the 2015 run, boom, nice and high from there, as you can see from that point. This is a nice major low, swing low there, and then boom. All right, we have swing lows here too. Not saying we don't, and that goes higher, and we have swing highs, bang. Then it gets really messy here. Got a nice separation, okay, like this nice separation, and we had a cross here, and we continue higher. All right, and it's between this point here, separation, 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 separation. So nice swing moves, nice curved round moves lead to higher prices. All right, so this could be a nice separation and go into March. I reckon March probably, you'll cross bullish, and then you get a nice move out of that one, and it'll probably be moving by then. So the 1 weekly time frame will be the early indicator to get in, and then this one. I said the mid risk metric as well. Risk metric, and during these times, okay, the 2 weekly time frame now. Got these crosses. Where are we? Yep. I'm not going to actually include every single cross, okay? But when these crosses occur, you want to make sure, bring this down a little bit, go back to the start. They occur during the low risk levels, okay? So you can see there in green, we crossed bullish MACD, boom, went higher, okay? There it is here again. We were in green, low risk, we went higher, all right? This here cross bullish, but with higher risks. This here low is coming out of the blue, so it's going higher. There's your low risk, boom, went higher, okay? Coming out of this low, boom, went higher, okay? In low risk, bullish cross, boom. Coming out of low risk, bullish cross, boom. Coming out of low risk, bullish cross, boom. There's low risk there, you can get across. Now we're in low risk. We're in low risk, blue, deep blue. We want to see a nice cross soon in probably March, take some time. That'll be, in my opinion, bullish, continued bullish upside for the 2 week time frame and the price of Bitcoin. So I think that's pretty much it for the video. So we've gone way longer than 10, 15 minutes, another 30-minute plus video. But it was worth going into detail, just going over everything, okay? Moving averages, 50, 100, and you look at the 20 week as well. What happens around the price around there. And if you lose 100 week, that is pretty much the line in the sand. Bear market is definitely well and truly underway. But we're there now. We're at the 100 week right now. So being there in a post-halving year, interesting. Usually wait to the bear year, the midterm year to get to 100 week. But we're there now. So we're front-runned it. And at least we know now if it breaks, we've definitely got another year long bear market coming up in 2026. If we don't, you hold it and go higher. Yeah, awesome. That is the line of the sand for me. That comes down to the 100 week and MACDs and that. Yeah, that's fine. The 1 weekly time frame crossing soon, another month or so, and the 2 weekly time frame could cross in the next few months. All right, to really confirm that move after the 100 week has been bounced off, we break the 50 week and then 20 week and go high. All right. So you want to see some nice momentum now. No more capitulation low below. The 100 is the line in the sand. I went through all the different examples of every time the MACD crossed in 1 weekly time frame. 22 out of 27 times, it's played out to the upside. And then the other 5 times were during bear market years, which were the midterm years, 2014, 2018, and 2022. All right, so coming into 2026, will we have a fake cross and go lower? It really depends on the 100-week now, because we're at the 100-week, we're below the 50-week. Like I said, that's the line in the sand. So if you enjoyed this video, please smash the like, comment your thoughts below, subscribe and stay updated. Be sure to check out the links below, and I'll catch the next one. Cheers.